Good day! We are the Group 3 and we'll talk about Mighty Corporation tax evasion case. Tax evasion is using illegal means to avoid paying taxes. Typically, tax evasion schemes involve an individual or corporation misrepresenting their income to the Internal Revenue Service. Taxes are primary sources of income of the government to fund public expenses, which are necessary to everyone. However, due to bad practices to decrease the amount of tax due payable of some large enterprises, it affects some collections of the government and some public expenses like healthcare expense are adversely affected. Tax evasion is a criminal offense. Tax evaders are subject to serious penalties and criminal charges.
So, Mighty Corporation is an emerging corporation because of proper management. It is very dynamic and strong to compete with huge corporations and companies. It is also an organization that introduces continuous innovation of their products. So the management is very sensitive in implementing the rules and regulation of the organization to achieve and attain its vision and mission. So the corporation is very passionate to increase their market share to achieve its vision. Thus, the corporation should continuously promote and develop their marketing strategy to maintain customer relationship and have loyal customers. The organization should maintain a harmonious relationship with employees to achieve goals and objectives in a short period of time.
To give you background of Mighty Corporation, it is a Filipino corporation and it is the second largest cigarette manufacturer in the Philippines from 2010 to 2017. On September 8, 2017, Japan Tobacco acquired Mighty Corporation for 46.8 billion, in which the 30 billion is paid to Philippine government in settlement of their unpaid tax liabilities. To give you a little history, in 1945, the Mighty Corporation is established as La Campana Fabrica de Tobacco Seed Corporation by Wong Chu King. In 1948, a second factory was built in Barangay Olympia, Makati. Moreover, in 1963, a facility for tobacco, threshing and redrying was constructed in Malolos, Bulacan. And in 1993, the company acquired the trademarks of rival Alhambra Industries and Corporation. And during 2001, the company entered into a cigarette manufacturing agreement with rival Sterling Tobacco Corporation to produce the latter's brands.
Is the continuation of the company background. In 2004, the company entered into a cigarette manufacturing agreement as the latter had acquired the trademarks of Sterling Tobacco Corporation. The next one, the company increased its market share from 3% to nearly 20% in 2013 as the result of consumer down trading from premium to low-end brands. Premium brands include Marlboro, Lucky Strikes, Winston. Low-end brands include Mighty and Fortune. The company endured accusations by the rival PMFTC since the implementation of Public Act 10351, commonly known as the Sin Tax Law of 2012. In 2014, engaged in VAT, the smallest player in the Philippine tobacco market, to explore partnership options. In 2017, as you can see in the PPT, the transaction included the company's trademarks, intellectual properties, sales and distribution network, manufacturing equipment, and inventories, and the payments, the proceeds, were to be used to boost the Duterte administration infrastructure program.
Facts about Mighty Corporation. The Bureau of Internal Revenue officials pressed charges against Mighty Corporation for supposedly using a bogus tax stamps on cigarette packs. The 9.5 billion tax evasion case was filed with Senate Prosecutor Susan Dacanay of the Department of Justice on Wednesday, March 22, 2017. According to BIR, Mighty Corporation made its essential payment to the government in July in the amount of 3.44 billion using a manager's check. When Japan Tobacco International bought the tobacco company in September for 45 billion, it opened the door for the government to recover the remaining 25.5 billion from the settlement. Mighty Corporation offered the government a 25 billion settlement, which President Rodrigo Duterte claimed will be utilized to rebuild the earthquake and war-damaged cities of Marawi and Ormoc City.
My name is Iris Juluingas, and this is the narration of the issues. So, on 2017, BIR filed a criminal complaint with the Mighty Corporation due to the unlawful act of non-payment of their income tax worth 9.5 billion pesos. So, they are also using a fake internal revenue stamp, or also known as the excise stamp. This kind of stamp indicates that they have already paid the required excise tax of the product. But what they did is illegal. They are clearly violating the revenue tax code. And with that, Mighty Corporation was held responsible considering of the support from other government agencies who cannot condone this kind of act, especially the Department of Health and the Department of Education. They strongly believe that the fund could have provided a variety of relevant medical and educational assistance like building classrooms and providing free medical services and medicines.
The Bureau of Customs raided unregistered warehouses in Pangasinan, allegedly owned by Mighty Corporation, which resulting in the seizure of smuggled raw materials and counterfeit cigarettes or the fake cigarettes. This was followed by a series of raids on Mighty Corporation's unregistered warehouses in Pampanga, Bulacan, and General Santos City. Those warehouses they raid resulted in discovery of thousands of cases of cigarettes with fake BIR stamps. In addition, Mighty Corporation uses imported cigarettes or imported materials to make cigarettes for export. However, they diverted it to the domestic market without paying duties or taxes. And also, the Mighty Corporation undervalued the price of imported tobacco and filters to avoid paying import VAT and custom fees.
The complaint filed by the Bureau of Internal Revenue against the Mighty Corporation, which is local cigarette manufacturer, has dismissed by the Department of Justice. After the BIR's move to drop the 3 tax complaints it had filed against the tobacco company on September 26, 2017, the DOH granted the motion on October 2. By the aforementioned petition to withdraw, the motion of Mighty dated July 20, 2017, seeking for the remand and reinvestigation of instant cases, as well as the submission dated September 7, 2017. Are therefore declared moot and academic. On September 26, 2017, motion made by the complainant BAR is hereby approved. By this action, the complaints in the current cases are dismissed.
Furthermore, aside from the aforementioned, the 3 cases that has been filed by the BIR was dismissed was also because of the tax settlement offered by the Mighty Corporation amounting to 25 billion pesos, which was received by the Department of Finance. The breakdown of the 25 billion tax settlement, which was first is the 3.5 billion pesos, which this is the deficiencies excise taxes of the corporation from its cigarette products, and the excess of 21.5 billion pesos, which represents as the tax liabilities of the company and its shareholders. Further, stated in a letter that Barrientos, one of the top executives in the corporation, is asking that once the tax settlement is accepted, the BIR will issue its final tax assessment and clearance to the corporation. He further said that if the deal with the JIT once sealed, the Mighty Corporation's operations will happen.
Other opinion. The Bureau of Internal Revenue withdrew its charges to Mighty Corporation. The Department of Justice approved the BIR's motion to withdraw the filed case on Mighty Corporation. It was almost 3 months when the BIR, DOF, and President Duterte accepts the settlement offer of Mighty Corporation. The BIR had filed 3 tax evasion complaints against Mighty Corporation and its top executives for a total of 37.9 billion in unpaid excise taxes for allegedly using fake tax stamps. According to President Duterte, the tax settlement will be used for the rehabilitation of the war-torn Marawi and for Ormoc City, which was recently damaged for the magnitude quake.
First alternative, or alternative 1, claim deductions to minimize taxable income and maximize expenses to lessen the tax liabilities. The corporation could maximize its expenses over or than the sales. More expenses could result to low tax to negative, since as we all know that taxes they pay for the corporation tax is based on their sales. And also by controlling the issuance of receipt, since the sales is based on receipt issuance in BIR Form 2307.
The second alternative that Mighty Corporation can do to lessen tax liabilities is to manage requirements and track deadlines of sin tax payments to avoid penalties and surcharges. Since the Bureau of Customs recently discovered a tax evasion scheme by this homegrown cigarette company where they use fake excise stamps on cigarette packs, the company could instead appropriately manage the requirements of the National Internal Revenue Code that penalizes falsification of stamps. With this, they might be able to avoid paying additional taxes and penalties worth 9.56 billion pesos. Moreover, the BIR strictly imposes deadline for tax payments because it has been stressed that the sin tax reform law is a prime directive to sustain the universal health care program of the government in executing health-centered priority programs, especially to the destitute sectors of the society. So by carefully tracking deadlines, they might be able to lessen their liabilities while contributing a strong support to the financial resources of our healthcare in the Philippines.
So, results and discussion. Here are the pros for the both alternative. Alternative 1, the first option will assist the business in minimizing the taxable income and maximizing business expenses in order to reduce the business tax liability. It will be advantageous for the business to make deduction. Alternative 2, the second option will assist the business in maintaining accurate documentation of the requirements and keeping track of deadlines. By doing so, the company will be able to reduce the additional expenses brought on by fines and surcharges. On the other hand, the cons for both alternative are: Alternative 1, the first option will necessitate the hiring of professionals to assist business in determining the best tax deduction. This entails extra expense. For Alternative 2, the second option will result in more work for both the employee and the business. This indicates that it will require plenty of time and effort.
Good evening, everyone. This is the SWOT analysis of the results and discussions of Mighty Corporation. Strengths: Alternative 1, it will reduce tax payment of Mighty Corporation. Alternative 2, it will make easier to track tax schedules payments during deadlines. The weaknesses of Alternative 1 is overstatement of expenses might occur without proper knowledge of employee. Alternative 2, the employee might forget tax schedule payments due to hectic schedules. The opportunities of Alternative 1, they can let the employee attend seminars outside the organization about proper knowledge of claim deductions. Alternative 2, hire a tax expert outside the organization. The threats of Alternative 1, the government might check the improper or overstatement claim deductions. Alternative 2, the cost of hiring tax expert outside the organization is costly than the benefit.
Good day everyone, I am Nika Jona Eslano and I'm going to discuss about the inference of this case study. So we all know that the basic goal of running a business is to increase profits, and in order to do that, we must reduce costs. However, if we choose to follow these typical business practices, your tax obligations will increase. So in order to lawfully avoid it, you might adopt the strategy of increasing your expenses and decreasing your earnings by claiming deductions.
In business, every centavo counts. When it's above the bottom line, The smart businesses are the ones who study their liabilities and minimize them as much as possible. However, mighty corporations use counterfeit tax stamps to avoid paying taxes, which is completely illegal in deliberately reducing tax liability. So in order for tax obligations to manage them better, the corporation must make use of the first alternative on claiming deductions to minimize tax liability and reduce the amount of taxable income.